And good morning, and welcome to Women Who Rock with Success. And thank you for joining us on today. And today we will be talking about taxes, business taxes. This is very, very important. And a lot of times around this time, everybody gets confused. Everybody kind of, try to figure out what to do in the last minute. Some of us are still working on our taxes. I know I am. And so we want you to be able to get the most information out of it, because sometimes H&R Block and other tax professionals may not have the opportunity to sit down and talk with you. So we have a professional expert in the studio today that is going to help us to understand a little bit more about taxes, the preparations, and some of the forms that business professionals need in order to be successful with their planning. So welcome to the studio, Ms. Tatiana Tsoir.
Thanks so much, Diane. It's great to be here.
Oh, absolutely. So first of all, tell us a little bit about you, and also what kind of compelled you to be able to get into taxes and finances?
It's actually a funny story because I initially wanted to be a lawyer. As soon as I learned what the word lawyer meant at 14, I was like, this is exactly what I want to be. But, I actually even went to a law school that's a hybrid. I grew up in Belarus, and there it's a hybrid program. It's not a graduate program like it is in the US. And so I went for 2 years out of 5. And then I came to the US and had to switch to complete my bachelor's, and I had to pick a major. And as I was, supporting myself and working, I actually picked accounting because I thought, okay, I need a skill that will carry me through the rest of college and also through law school so that I can support myself financially. And kind of somewhere in the process where I was learning the accounting basics at night and applying them at work, because I was working as a bookkeeper, I fell in love with accounting. I fell in love with the numbers, and I was always good at math, but this was a next level passion. And so I kind of abandoned my law dream and switched to another dream and got into the accounting and finances.
Oh, wow. Okay. Okay. It's just math has not ever, ever, ever been my strongest point. So kudos to you and whoever else does CPA, accounting, financial taxes. No, it's never been my cup of tea ever. But and that's the reason why we have professionals like you to be able to take on these brainstorming tactics that we try to resolve. So the next question is, we want to talk about a little bit about taxes. And we want to also talk about the importance of filing on time.
Yeah, absolutely. And this is something that when I think about it, I think that it's a given, right? It has to be done. But I've certainly, over the course of my career, have met people who haven't filed taxes for 5, 6 years, who've never filed taxes, who don't pay taxes. And I think the reason is a pretty deep psychological reason, that all of us, we hate paying taxes. Even accountants hate paying taxes. We hate dealing with them. We hate paying someone to file it for us. So it's a lot of hate all around taxes. But in the United States, almost everyone has to file a tax return, especially if you have a business or a side gig. And so filing on time is a must that everyone should do. And the reason is that usually if you don't file a tax return, the statute of limitations on when the government can come back and audit you and or assess additional tax potentially, that never starts. So if you never file, or if you file, 5, 6 years later, that's when the statute of limitations starts to run. And if you never file, it never starts to run. And so it's always advisable to file no matter what. If you can't pay, you can always work with the government to create a payment plan or whatever, make it affordable if you made a mistake. But if you don't file, you have no basis, no baseline sort of to even move forward. So, and that becomes a huge snowball very quickly.
No, absolutely. I kind of wonder, before we go to the next segment, I kind of, I guess I've been kind of concerned as to sometimes, I guess an individual will be penalized a little bit more severe, I guess if that's the word I want to use, rather than perhaps maybe someone that's in government, I guess I want to say, because I think all of us have to file them, each year, but I guess that's just something that has always been a curiosity to me as to, I guess, how the IRS perhaps may view a company versus an individual sole proprietor or a professional such as someone that works in politics, because I know that we're kind of, which we won't get into this, but I think they're kind of wrestling with the former President Trump, for not, turning over his information and what have you. So I just, was always curious, and then we want to kind of work with that a little bit. If you didn't mind, kind of helping us with that as well, with the audience, as to how does in your terms, how does the IRS determine how to sanction and penalize a sole proprietor or an individual that is filing for their individual taxes versus someone that perhaps may be in a white collar position?
So typically there is no difference in a way. The rules and the code is set in stone. However, there are procedures in the tax code that allow for the IRS to settle or to find a common ground with the taxpayer, let's say, who owes money. The different, I personally would love to see Trump's taxes, because I'm not just a regular traditional accountant where traditional accountants typically file a lot of tax returns. There's not a lot of proactive tax planning going on, proactive tax reduction going on. And I'm sort of a progressive accountant, and there is a bunch of us already at this point where we look at, and let me just put it out there that the business or a side gig is usually a great, I guess, opportunity to save taxes. And the reason that the US tax code is geared toward small business, there are a lot of things within the tax code that specifically support the small business. And if you know them, if you have someone who's on the lookout for that for you, that's when you can pay the least amount of tax legally, which is your right as a taxpayer, according to the Taxpayers' Bill of Rights. And so I personally would love to see Trump's tax returns. And the reason is that, I work with clients and I help them connect business and personal in a way where they set goals and they set potentially personal goals and potentially business goals and together, and they have different circumstances. Some of them have children, some of them are married, some of them are not, and etc. And all of those things play into what we can do as progressive accountants to save you money on tax proactively. Once the year is over, there's not much we can do. It's the retirement plan, maybe, and maybe an HSA. That's it. But as the year progresses, there are ways to income shift. There are ways to structure business or businesses with multiple entities legally, so that you can actually legally pay less tax. And so I'm only one person who does tax planning at my firm, but imagine someone like Trump having a team of tax lawyers, a team of accountants, progressive tax accountants, everybody working together to save more money on tax. And so for me, it's actually very exciting. It would be very exciting to see, because there's a lot of opportunity, especially, Trump being a businessman before being a president. I would love to see sort of how a team of people, what they can do for a business owner. So I'm actually, I'm very curious about that.
Yeah. I mean, I just, it's just something that I guess, and I know I'm not the only one that has that type of curiosity. I'm pretty sure the audience has that same curiosity. Pretty sure people around the globe may have that same curiosity. It's just, sometimes it can be difficult to be able to, I guess, well, I mean, you already stated that it's one for one, it's for everybody, but it's just sometimes people just, I don't know, I don't want to use the wrong phrase, but this is here in our location, you see politics all the time, just, you know, going through that mechanism where they feel that they don't have to pay their taxes. And so I didn't know if it was a certain bracket or what have you. And so we just wanted to be able to get your take on that, to
Yes.
help our curiosity in that area. So
Yeah,
we know
yeah.
that. Go ahead. Go ahead.
I'm sorry. I wanted to come back to your actual question, and tell you. So the IRS, and there's no rule for that. Like, it's not a procedure, but
Okay.
it's just the statistic where if you are a business like a corporation, S corp, or a partnership, the audit rate for entities is 10 times lower than, let's say, a sole proprietor or a single member LLC. And it's just the nature is that I think the IRS has focused more on the single member LLCs, somebody with a side gig or a small business, was because usually those are the people who try to cut corners, in a sense that, did claim deductions, I guess, that they're not entitled to. And so that's why it has been so much higher rate. And we're not talking about a lot. I mean, I'm from a country where everyone was audited, meaning every year, every business was audited every year. So it's 100% audit rate, right?
Right.
You can't
Right.
submit your reports
Mm-hmm.
without it being audited. So in the US, sole proprietors, people who claim their business on their personal taxes get audited at a rate of about 3.5%. Businesses like corporations and partnerships get audited at about 10 times less, so 0.35%, right? And
Right.
so that's just the nature of how it's been. And I think that the IRS has been making those choices on purpose, just watching on how those audits turn out over the years. And I think that that's the goal. But in general, when you have a team of lawyers, let's say, or tax accountants working for you, they are all doing not only proactive tax planning, but they're also setting up money trail, which is what I focus on. So if there is a payment from one entity that you own to another entity, then there should be justification for that, a contract, an invoice, some sort of an agreement, And so as small businesses, super small businesses, we don't always do that. Well, I do for my clients, but most people don't. And so that's where it looks like people get more penalized when, or less penalized if they're a politician. Politicians usually know the value of tax planning and they pay for it and they get the service. And I think that's the difference that at least I personally see professionally see, I guess, in the business.
Okay. Okay. That's fair enough. That's fair enough. So yeah. So today in this 21st century, and this is what we have been dealing with the biggest part of the year. And of course, we've been doing other shows for women and what have you, but we've had some shows in some investigation cases in regards to Bitcoin. And so some individuals, of course, have their own digital money, cryptocurrency business. I mean, they do this for a business. And so one of the CEOs was stating something in regards to cryptocurrency is that the human resource management in corporations in the United States, they are paying their employees through Bitcoin. So I wanted to see how you can be able to help our audience in that area as to the IRS tax filings. Is that something that is permissible with the IRS as well? Because some people, people, we don't know enough about Bitcoin. Some people don't. Some people don't know enough about cryptocurrency and what it actually means. And then I think we had another professional that was on the show about a couple of months ago, and he was like, "Okay, we don't do Bitcoin, we're cryptocurrency," and so it's a lot of confusion, a little bit, I guess, as to
Yeah.
what it is. And so and that's the reason why we brought you on the show, simply because of the fact you kind of straddled your profession straddles right in the middle of both of it
Yeah.
through the U.S. dollars as well as the cryptocurrency, as well as teaching other individuals about IRS and different formats of it. So Is that something that the IRS is even accepting? Even though, people got ROIs, their return, they got retirement investments in cryptocurrency, which that is probably a wonderful investment. But I'm just trying to help our artists to be able to see how that can be able to be beneficial for them, or if the IRS also allows that type of filing through digital money.
Yeah, yeah. And so last year, there's this NYU, so everybody knows NYU, right? New York University. NYU Law School has the best program in taxation and LLM in taxation, right? It's a master's in whatever law studies. And they every year they throw this NYU Tax Controversy Forum. And last year I attended the forum, and it's very informative. They invite basically a number of people from the IRS, from the Department of Justice, from a number of agencies and top, high up people, the commissioner, the chief counsel, and things like that. And last year, when I was attending, I was curious because Department of Justice and representative, and also the IRS representative, they both said that independently, they both said that the IRS is very on top of cryptocurrency. They're hiring programmers and high-end employees to track the cryptocurrency transaction for anti-money laundering. I guess that's the biggest concern for the IRS and the US government in general, money laundering through crypto. But because of the blockchain technology, and them hiring programmers, I think that that's their focus. Essentially, that's what they said last year. And so definitely it's a good question and a good concern. And in general, the US taxation treats crypto as a general, like a capital asset, a stock share or a bond or whatever. And imagine you're in a Silicon Valley and you get paid in stock options or stock units. That the value on the day of grant, it's the same thing with Bitcoin, right? Or any other crypto. The value on the date of grant becomes your compensation subject to regular tax. So the FICA, the income tax, the state tax, whatever. And then you keep that in your, let's say, wallet or investment account. And as you sell it, if you sell it before the 1 year period is up, then it's a short-term capital gain or loss. And if you sell it after a year and 1 day, then it's a long-term capital gain taxed at a preferential rate. So it's certainly, there is an opportunity there. I personally, if you want to know my personal opinion, I'm not big on speculation. And okay. So to me, crypto is a form of speculation because, when you have foreign currencies and potentially other capital assets like a real estate or a piece of real estate or something, there's real value behind it. And I understand that behind crypto, there is processing power. That's also real, sort of, right? But at the same time, I feel that the fluctuation of crypto value is it's so volatile. It's based on nothing. Some news not related to processing power come out, and all of a sudden, crypto, Bitcoin, or whatever, any other falls or rises. And so I think that it's a great, potentially great opportunity. But just as with stock options or stock units, when you get granted those, I wouldn't put all my eggs in one basket. And so my sister-in-law, her first job in the US, when when they said, oh, we're giving you this amount of salary and then we're giving you options or stock units, I don't even know what it was. She said, you know what, just give me the dollars. And I don't want any stock units, and just give me the dollars, because that's something that's real and tangible, right? With the crypto, you have a little risk. And I think that it's important to remember that you have to understand what is that currency that you get. Is it Bitcoin? Great. But there is a ton of other ones. And so how quickly can you sell them if you wanted to? Or can you hold it and risk that potentially could lose value to zero? And so there's definitely both an opportunity and a risk related to crypto. But if it's a small a fraction of your salary or a small fraction of your compensation, I think that it's there is a potential to make money on it for sure.
Absolutely. My whole thing is I try to make sure that, I give the audience all the meat and potatoes, because of course I don't want it to fall back on me. Oh, you told us that, oh, well, we can do cryptocurrency or Bitcoin and it's going to do da da da. No, 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 no. So that's the reason why we bring the professionals on, such as you, to be able to give a constructive opinion as to, you know, um, how the best way to financially fit the portfolio. That's a big concern of mine. And I don't know a lot about Bitcoin or crypto, and I'm not downing that product. I'm not. But I know some of the professionals that have came onto the show, it was like, we don't want the government to rule our money. And so, I mean, and everyone has a choice. Everyone has a choice, but one of the professionals had stated that it's only going to be like what? They're only going to make 32 million coins or something like that. So I'm like, that's going to run out pretty quick. So I just wanted to kind of give the audience a balance on both sides, and so they can perhaps maybe be able to make their decision. So we want to get into the next segment. We want to talk about forms, the type of forms that a professional should be filing. This, and I'm have learned down through the years as well, with private organizations, there are different forms, and sometimes you have these softwares online. Tatiana, I'm gonna say this, I'm gonna say this. It was an offer that came, and so the individual's like, oh, yeah, we're doing da 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 da. We'll do this, blah blah blah. But they were not tax professionals. And so my thing is to the audience, if they cannot provide feedback as to coaching the individual, such as what you do, I'm pretty sure that you do with your firm, I think it would be kind of lack of a risk. That's just my opinion of that. So we want to talk about the forms and what types of forms that LLCs can file, business corporations, sole proprietors, and I know you can't get into all of them, but try to give us some of a little bit of what they can be able to do, and then we're going to get into something else too, versus the everybody wants everything easy. Tax term, and these things are great if you're just filing just for a single employment, but our audience has their own profession. These are businesses, these are corporations, and what have you. And so I want to make sure that we kind of give them the both sides of the fence so they can make the best decision and choices.
Yeah, absolutely. And I think that it's important to know some of the basics for every entrepreneur. The problem is that both the government and organizations like TurboTax and H&R Block make it seem like you can do your own business tax returns.
Mm-hmm.
That's
not we're gonna put I'm gonna stop right there. We're gonna put a disclaimer to the show as well after we get through tweaking it and editing it and everything, so to ensure that we're not here to bash online softwares and what have you, okay, things like that. But I just feel that it's best to be able to get the information from a professional such as you, so it's better to be able to have a coach to guide the professional or the business owner through their process of filing taxes. So
no worries. I think that knowing some of the basics is critical for every entrepreneur. And the reason is that even if you use a professional to file your taxes, it's still your responsibility. You're still signing the forms. Even if it's an electronic signature, you're the one signing it. So a lot of people take this approach of, oh, I don't understand it, I don't want to even look at it. And so to give you a little bit of a summary of what needs to be done, the filing form depends on what type of organization you are. Let's say, and there are very limited options. So sole proprietor, where you just work under your own name, typically that gets reported on a Schedule C, which is a part of your individual tax return, Form 1040. Most people would file Form 1040 every year. 1040 is an individual tax return. That's a federal form. And then you would have your state's form. And it's obviously different for every state. But you would file a 1040, and Schedule C is a part of that. So you would pay your taxes on the business or side gig within your individual tax return. And similarly, LLCs, so limited liability companies, where you are a sole owner, so you're the only person owning the business, similarly, that would get reported on a Schedule C of a Form 1040. The reason that I say that not everyone files a 1040 is that there are exceptions for minors unless they have income. People who receive Social Security benefits and don't have any other income as well, they don't have to file. And a couple of other exceptions. If you make less than a certain amount, you don't have to file a form. So that's kind of the first part of that. Then every business files a tax return as well. And if you're an LLC where you have a partner, you would file Form 1065, which is a partnership tax return. And you would, unless you would actually make an election to be taxed as an S Corp or a C Corp, you can do that for tax purposes. And so generally it's a Form 1065 filed every year by March 15th for calendar year partnerships. And most partnerships, unless they're investment partnerships, which is where, you know, a bunch of people pull money together and buy an investment property or a number of assets, generally it's a calendar year partnership. For S corporations, so there are two types of corporations for tax purposes only. One is a regular C Corp, which pays its own tax, sort of a double taxation, even though it doesn't really work out to be double. But a corporation can have a regular corporation can have a fiscal year if it wants to, if there is a reason, or they just want to not have the same calendar year, which I support because it's part of my tax planning strategy. Those corporations file Form 1120, and generally that's by April 15th for calendar year corporations. It's 3.5 months after the end of the year. So I have a number of C corporations, regular corporations, where fiscal year ends on March 31st. And so their due date would be July 15th, because it's for 3.5 months after the end. And then finally, the subchapter S corporations, which is a pass-through entity. It's still a corporation, but it's a pass-through, so it doesn't pay its own federal tax, even though many states have a state tax on it. Those file Form 1120S and report the income and then get a schedule that they carry to their own individual tax return.
Okay, that's fair enough. Like I stated before, sometimes you know, if an individual is trying to do it on their own, perhaps maybe trying to save money or what have you, and then you run into a bottleneck online, you know, that can be some challenges. And so I think it's kind of a little bit more important to go into the brick and mortar and sit down with someone that is a professional, and so they can be able to understand all the dynamics of you know, what they can be, because sometimes there are a lot of things that a tax preparer, a professional tax preparer, can give to the business owner as to some incentives that are even going on or have been applied, you know, to the IRS or what have you, and also to them. And so, and then there are some, you know, perhaps maybe we'll conceal it too, but, you know, we just wanted to help professionals to be able to understand kind of like a balance in between the two. So tell us a little bit about your tax services and what is it that, and I know you prepare taxes and what have you and things, but how rewarding is that for you to be able to go, you know, to have your own and also to be able to provide, because a job is one thing, but when you can be able to be successful for somebody else, that is rewarding.
Yeah, absolutely. And, you know, I've loved accounting since college, and I opened my own firm. After I've worked for somebody else for a couple of years, and I honestly, I don't call myself a tax preparer in the sense that I do prepare taxes, but it's only a small part of what I do.
Okay.
I work with clients throughout the year. We meet at least once or twice a month, sometimes 3 times a month, to talk about things, for them to ask questions and to feel safe asking those questions. And, people have a lot of insecurities and think that sometimes, oh, I should know this,
Right.
but I
Exactly.
don't. And they are afraid to ask. And so
Right.
my coaching support to clients is geared toward that, so that they can feel comfortable and know and learn over the years what to expect and what taxes mean and what the forms mean and what they have to look for. And so what I actually tell people is that I don't prepare tax returns. I transform people's businesses that in turn transform their lives because
Okay.
of the support that I provide. Because accounting, even though it's boring and whatever, taxes, all of that financial part of a business is what makes it a business.
Right.
And also that can make or break your business. And so
That's true.
knowing it well is critical, I think.
That's true. Absolutely. Absolutely. So, are there any last tips and tools that you would like to share with the audience? We thank you also for being with us on today on the show, but we also want to be able to, for you to be able to network with the audience and the audience to network with you also. So you can be able to share your last two tips that you would like to share with the audience, as well as, are there any publications that you have published that you would like to share with the audience? Excuse me, I'm getting a little choked up. And also any social media handles, and then your website, if you would like them to be able to check out you a little bit further, you can be able to share all of that information at this time.
Yeah, my favorite tip I like to share is the mindset switch, I guess, is don't fake it till you make it when it comes to money, numbers, and taxes. A lot of people take the approach of, oh, I'll fake it till I make it, or I'll delegate it to someone else. But that's not the right approach, because you will never, well, it's very hard to be successful in business if you don't have a handle on the financial part. And so that's my tip for your audience. But I wrote a book. It's called Dream Bold, Start Smart. And the book is a roadmap on starting a business, or it's for someone who's just starting out or someone who's been at it for a year or two, to make sure that you get all your basics right. And it's a plain English guide, very, very relatable. So I encourage everyone to look at that. And if you want to connect with me, I am present on all social media, but I'm really live on Instagram, and my Instagram is Tatiana Tsoir.author. So please connect and let's have a conversation. And my website as well, TatianaTsoir.com. Check it out, see what's available there, and I'll be happy to connect.
Okay, absolutely. We thank you so much for taking the opportunity out with us today. We appreciate it. Audience, we have our upcoming symposium that's coming up for Women Who Rock with Success. So stay tuned for that in the month of June. We want to thank Tatiana once again for being with us and sharing the financial literacy, I guess, to our audience, and the importance of the taxes, the forms of the taxes. We talked a little bit about Bitcoin, cryptocurrency, and the effects of that. And then you also have the opportunity to make your choices based off of what you've heard today. So thank you once again for being with us on today.
Thank you, Diane.
Okay. Have a wonderful day, everyone.